Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for June 2nd. This is Thursday, 2022, 5:35 p.m. So, crazy day. OPEC comes out, says they're going to produce more oil. Oil prices go up, and they went up pretty big today. I'm surprised. You would think more oil. That's not going to be it. President Biden's going to go visit Prince Solomon. Remember, this was the man that killed that reporter. At least that's what the president said. And now he's going to visit the killer. You put this all together. The world's strange. When you need energy, you forget everything else. The president's going there because he's trying to get something going so he can fight inflation, energy prices in a way. All of these markets have come alive again. Bonds and notes. You have jobs data tomorrow. What do you think the market's going to spend the first couple of hours doing? Dissecting what does the jobs data mean. They're looking for 330,000 jobs, roughly. So let's assume they get that or more. Well, is that down? Is it up? If they get more than that, it means the economy's still red hot, people going to work, tells the Fed they can get stronger and stronger. Why? In other words, stronger, they can get a 50-point hike, a 50-point hike, and as the vice chair of the Fed today said, maybe September's another 50-point. They're going big. Bank of Canada's talking going big too. There's a lot of banks that want to get ahead of this and get this done while they have strong job market. Why? If people have money in their pocket, they're making a good living, and you're raising interest rates, you'll slow demand down, but you don't have to break the economy in doing it. Does that make sense? That's basically what this is about. If the jobs data comes out weak, in other words, let's say 275,000 jobs, just give a number. Well, that might take a September 50-point cut off. The market's going to be all over the board, and they're going to look at this in the stock market, bullish, bearish. Which way does it go? I happen to think we're getting a bear market rally. I don't think it's over. I think the market on the weekly charts has been trying to get up to the 18-week moving average of closes. I'd like to see a bit more of a rally to get there, and I'd be very satisfied that that's all that it did. That's what I'm thinking the market wants to do. When you take a look at the S&P on a weekly chart, and the rest of this is going to be daily. Over the weekend, we'll look at the weeklies. But you can see what I'm saying. 4293 is that number. So from here, that's another 100 points. You know, that could be one-day trade in this market. You never know. When you look at the dailies, they should be in something of an uptrend in order to accomplish that. And they are. You've had the higher lows, higher highs. No surprise there at all. When we take a look at where the market's been coming, it's trying to make a run to the upside. Now, what kind of run is it going to make is the question, because right above this is the Bollinger Band. And the Bollinger Band, think of it this way. This is an algorithm designed to stop the market on the downside or upside, not stop it from trending down, but staying excessive under it or over it. You can get there, but only 5% of the time. Go back, do your study. You will see how the algorithm adjusts the price. So you came from the lower band to the upper band. That is very often where the market now on this side starts running into key resistance. So I combine that, looking what I'm looking for on the weekly chart, and I'm getting my picture. You are not embedded. You are overbought. Overbought market into the resistance, a few more layers here, and you saw what the weekly chart looks like. The NASDAQ is the same picture. Let your eye first go to the momentum. It's not converted from an overbought at all. It's just an overbought market that's come from the lower Bollinger Band to the upper band, and it's fighting its battle there. You can get the afterburner effect tomorrow from the jobs data, but what are the odds of staying over the Bollinger Band if it does it? 5% of the time? I want the other side of the trade. That doesn't mean you go short. It means you're not going to stay over the Bollinger Band very long. That's what it typically means. When we look at the micro mini Dow, Coming up to the combination of the Bollinger Band again and the 100-day average. I promise you, if you open your weekly charts, you'll see that the resistance points are just above you on that one as well, and in the Russell. So the story is the same in all of them. And when I take you to the VIX, I was hoping we could maybe make a run to the lower Bollinger Band. Ideally, even the 200-day average. Boy, that would be neat. That's where the pros will cover their shorts, and I think you'll get a heck of a bounce after that all occurs. We'll see if I'm right or wrong. You don't bottom pick. There's a difference between being bearish, which I am, and looking for a bottom to take money off the table, which I am. It is not an embedded situation. Both numbers are under, well, let me just see if I can get this to work right here. That doesn't want to work with me. Must have done something there. We didn't lock it in. But in any case, what the market is doing here is it's just going to fight a battle. It's not embedded yet. 30-year bond. If we take a look, lower highs, lower lows, you see how the market is coming down right through that? Okay, trend is down. Higher interest rate still. Does that look like something that's bullish going into the jobs data? To me, it doesn't. If it drops further, though, I'd say the 137.8 level is going to be a support zone in the 10-year note if you drop further, if, and that's a big if, 118 zone. You've got here a higher high, lower low, no real trend pattern. In the dollar index, I admit I got snookered today in this market. Now, why? Yesterday, you had a reading on the slow stochastic of 20.43 on the close. When the market reopened, you went up to 23. So this morning, first thing, I'm out recording at 5:30 in the morning my subscriber video. I've got my traders short the market. I don't mind telling you, I had them short this market at the 101.92.5 zone. The market's up at the 101.60 zone. I'm going, hey, folks, I'll stay with my discipline. So last night you were not to get out. Today, as the market starts retracing, I said, if we can get out at break even, we have a jobs data report Friday and so on, we'll take a look. I would have viewed it as a gift. And I was prepared to write a special update to them later in the morning to come out. Didn't have to. The market let everybody out. I thank you. I don't know what it wants to do. So far, it's a bull trap. What do I mean by that? Yesterday, you go up, and when you follow through, you're losing the embedded reading. I use the reading of slow stochastics embedded on closes. Now, sometimes with 20 minutes left to go, an hour left to go in the day, you know where you're at. Yesterday, if you think I wasn't spending time, are we going to be over 21 on the slow stochastic or not? I saw where the market had finished at 2 o'clock, and as long as it didn't make a higher high or lower low during the day, that means you're not going to change the Bollinger Band. You're not going to change the slow stochastic formula. It always looks at highs and lows. If you're making new highs or lows, even after the market settles, that can change everything on you. So always pay attention to that, because when it reopens, it's like that. Boom. I knew we were going to lose it first thing in the morning. The question was it going to stay lost? And it takes so much trading discipline to hold yourself back. That's how people lose. You've got to create rules. And boom, I got the traders out even. But one of the things I was telling traders in the morning was also, especially my spider traders, I had them buying the euro yesterday, the FXE, and they've done real well with that one. But again, do you really want to go through the jobs data? A lot of decisions to be made there. Then we get to the pound. The pound is overbought, not trying yet to embed. I don't see a thing to do in that market. Bitcoin, look at what's happened. Do you see how narrow the Bollinger Bands have gotten? Whoa, something big is going to happen from there. Whenever that happens that much, big time events going to happen. I don't know if it's long or short. This could be where traders buy calls and puts and let the market make a run. Just break out of it one way or the other. Got it? The market can do that. You're straddling the market in essence, saying one way or the other it's going to blow out. Now, obviously, the June is not the place to do it because the options aren't going to have value for a lot of time. But some of the further back months could be interesting, and they are having options on this now. Brent versus WTI. I got to figure out, and haven't figured out, why the market rallied so much today when the Saudis and OPEC are saying they're going to give us more oil. Okay, that just doesn't make sense to me. And the market rallied. I can understand the resistance. I'm the one that told you this market's going to have a very hard time up here, and it's not embedded. I'll let somebody else want to own it. Are you embedded here? Looks like you're trying to be, as you can see. And if the market's embedded, then on pullbacks, you're a buyer in the market. Gasoline trying to embed, as you can see right here. Hasn't really done anything with it yet. We'll see where that goes. And in natural gas, coming down. And you can see how the market's sort of in no man's land. Here's my prediction in natural gas. As soon as we get the first heat wave in the center of the country and or East Coast, this will take off again and set new all-time highs. That's the next event you have to wait for. Until then, it lolly-dollies back and forth. Now, talking about lolly-dolly, do you know what a pivot point is? And you use them in markets like this. Whenever you get these broad swinging markets, pivot point, it's the homeland of it. It's a market that looks at the previous day's range, has a formula. You have it probably on your charting service already. You don't need it from me. You probably don't know how to work with it, though. And you're get a center line, resistance points to sell into, or buy points that as the market falls to buy into, trying to get back to the pivot point. It's a day trade tool. So if you're looking, be it spiders, ETFs, the futures markets, it doesn't matter. I have found this thing interesting as can be in all of them. I like the application of it. I've watched it for years. I'm very comfortable with it. And you want to learn how to work with it. So I created a 3-part series that explains it, shows you how to apply it, and then apply the all-important part to it, stochastics. What most people don't know how to do is apply timing to the moves that it projects. How do you do that? Simple. You get the video. Is the video free? Oh, yeah, it is, because it's an intro to everything else that I do. So a 3-part video series, free. All you need to do is go to our website under free offers, or I'll make it even easier. Just follow me right up here, put your finger, or most of you are going to have a cursor that you put up there. There are people that use their screens and touch it. You'll see an icon, give it a click, then fill out the information, pick anything else you want, we'll get it to you. I'm Ira Epstein. It's going to be a wild day, as I said. I can't wait for the morning. You have a good one.